Hey, Bulls and Bears, it's Friday, July 8th, 2022. Back with another dose of what? I'll give you 3 seconds. Three, two, one. Economic reality. Thank you very much. The economic crisis just worsened. Now, there's some headlines out there that are trying to put people at ease, make people think that we're not headed into a worsening financial crisis. So, we're going to talk about that. But first, I still see people in comments saying, "Where's the crisis? You said there was going to be a collapse. We're not seeing, markets crash. What's going on?" The crisis is ongoing. We have millions of people, actually most people in the United States, on the road to financial ruin, on the road to bankruptcy, on the road to insolvency, on the road to being forced to sell their home because they're not going to be able to keep up with these rising costs. The cost of living, which is already elevated, which is continuing to go higher in many different areas. Combine that with everything else, the continued weakness in the markets, all this paper wealth being wiped out, the slowdown in the home price growth, taking away the lifeline for a lot of homeowners that continue to refinance with lower rates, take cash equity out of their home to keep other types of debt paid off. Well, those lifelines are being pulled away, and the inner tubes being pulled away from the swimmers, and the debt is going to force a lot of these people underwater. So yes, the crisis is ongoing. It's not a collapse. It's not a Mad Max overnight event, but the crisis and the problems are continuing to worsen everywhere you look. When you look at the numbers, when you look at the stats and the data, debt is worsening, the cost of living is worsening, and it's not much out there that's going to stop it. But you see headlines like this, and you may think that everything's fine. Look at these awesome economic numbers. Payrolls increased by 372,000 in June, more than expected, as jobs market defies recession fears. So no reason to worry. Everything's fixed. Ignore the all-time high debt levels. Ignore all these other things that we talked about here. Ignore the slowdown in the housing market, the higher interest rates, the higher mortgage rates. Ignore the plunge in home sales that's going to ultimately lead to a housing market correction and the lifeline being pulled away for millions of people. Ignore all that because we had high numbers of payrolls in June. Well, think about the types of jobs that this includes. A lot of them part-time summer jobs and seasonal jobs. And just like that's been the case for many years now, these jobs are not going to be paying enough to keep up with this cost of living right now and all these extraordinary expenses that people are seeing. So when people look at a headline like this, it'll put them at ease. It'll make them think that everything's fine, and they'll believe the line that this is the strongest economy ever, unemployment's low, things are moving in the right direction. In the meantime, the 7 out of 10 people in America that are in all-time high debt levels are continuing to get further into debt. This jobs number is not getting, I would guess, not getting anyone out of debt. In fact, I'd say all these new jobs are probably people that are in the 70% of people that are living paycheck to paycheck. And when you look at some other recent numbers, it's even worse. Let's take a look. And we see this data tells us the real story. Full-time jobs dropped, part-time jobs dropped, but what about the people working multiple jobs? Well, that took off. So people now with these prices are having to work multiple jobs. So a side hustle, maybe 2 part-time jobs, maybe a full-time job and a part-time job. We've got the unretirement trend where people retired, now they have to go back to work. And who knows, maybe they're coming out of retirement and having to get 2 jobs. It's that bad. It's that bad with the levels of debt and this cost of living that's not being tamed. But now we're at a major turning point with the corrections in the markets. And this includes all these digital assets that people look at on a screen or on their phone, and they feel rich, they feel wealthy. Well, that's about to change. And if we look at this chart right here, I think we can see what's likely about to happen. If we look at the orange line, we see U.S. wealth, and that includes paper wealth and markets that were pumped up into bubble territory to give the illusion of wealth. Well, look what happened in 2006. That separated from GDP growth, And of course, it came plunging back down. It didn't quite meet the blue line, which is GDP, and that's because of a lot of the rescues that went out there, the bank rescue, the bailouts, etc., stimulus packages, TARP. Well, if we look to the far right here, we see an even bigger separation. In fact, if you want to compare it to the financial crisis, we're way beyond. We're multiple times worse and in more scary territory now than we were then. The bubbles now make the bubbles back then look tiny. And we look back at those bubbles in 2006, 7, and 8, and we call that the financial crisis, or what was ultimately ended up as being the financial crisis. And people think now that it's different, that things are not as bad, there's not as many subprime loans. Well, look what's going to happen. We already see a leveling off here of this illusionary wealth. And if things continue the way they are, we're going to see a plunge back towards the GDP number down there. And we're in a very dangerous time now. If they try to keep these bubbles inflated with more trillions in money creation, maybe they'll add on another $10 trillion in money creation. Nobody knows. Maybe they'll flip the script and cut rates and do another round, or not even another round, QE to infinity times a million. I mean, we don't know. But they're in a very precarious position right now, because that will lead to definite hyperinflation, and that's the line that they're trying to walk right now. They're trying to control prices and prevent runaway price inflation, while at the same time not collapsing the economy. Combine that with all of the other issues that we're seeing here and all these other situations that are arising across the globe, and there's no easy way out of this. And people that doubted us saying this a few years ago are seeing their savings now dwindling, and they're starting to see it and believe it. And many people that didn't used to really even care or pay attention are being forced to pay attention now, because they are going broke. 70% of the U.S. population, probably even higher than that now, getting into levels of debt that can never be paid off, especially when you look at the cost of carrying that debt. If you can't pay your credit card off every month, you're in big trouble, and that's most of the U.S. population. All of these shutdowns that we saw in 2020, that was basically a lifeline. It was the biggest drop in the stock market that we'd ever seen, but we also saw the biggest recovery in that. But the shutdown was actually a lifeline for a lot of people that normally would already be in bankruptcy. They would already have their homes foreclosed. And the powers that be are really going to have to make the stimulus checks a lot bigger this time and send them out more frequently this time to prevent this ensuing economic crisis. And that's the way I look at it, everybody. Please let me know what you think down in comments. Thanks for being here. Hope everyone has a great weekend coming up. We'll be back with another face-to-face report, maybe a walk and talk this weekend. Until then, everybody, thank you for being here. Be well, stay safe, keep stacking. Bye for now, and peace.